July 2023, a Singapore exchange-listed real estate investment trust made headlines when it busts its gearing limit. In the wake of the news, its unit price went into a free fall, slipping by more than 30% within a single day. But what is gearing, and is it the end for the REITs if they exceed their gearing limit? In this episode, we take a look at this important metric for REITs, and what it can indicate about the entity that you are keen to invest in. Please do drop us a like and subscribe if you would like to stay in touch with content like these. In the context of real estate investment trusts or REITs, gearing refers to the amount of debt that REITs employ to finance its real estate investments. Gearing is also commonly referred to as aggregated leverage or debt ratio. It represents gross debt divided by total assets. As we know, REITs typically acquire and manage income-generating properties, such as office buildings, shopping malls, hotels and factories. Instead of relying solely on equity financing from shareholders, they may also use debt to acquire and develop properties. The gearing ratio is calculated by taking a REIT's total debt divided by its total assets. For example, if a trust has $200 million in total debt and $500 million in total assets, the gearing ratio would be 40%. A higher gearing ratio indicates that the REIT relies more on debt to fund its investments. Gearing can be advantageous for REITs in certain situations as it allows them to magnify returns for shareholders when the properties generate higher cash flow than the cost of servicing the debt. However, it also increases the risk for investors, especially during economic downturns or periods of rising interest rates when debt servicing costs may become burdensome. REITs typically manage their gearing levels carefully to strike a balance between using debt to enhance returns and maintaining a sustainable and stable financial structure. Regulatory authorities often impose limits on the maximum gearing level to protect investors and maintain financial stability within the REITs industry. In Singapore, the gearing limit is 50% if the REITs meets a minimum interest coverage ratio of 2.5 times. Otherwise, the gearing limit is 45%. However, it is important to note the Property Funds Appendix states that even if it crosses 50%, it is not a breach if the increase is a result of events out of the manager's control, such as a depreciation in asset values. REITs that exceed this gearing limit may face several consequences, both regulatory and financial. The specific outcomes can vary depending on the jurisdiction and the rules and regulations governing REITs in that particular country or region. Here are some common repercussions of exceeding the gearing limit. First, is the loss of investor confidence. Exceeding the gearing limit means the REITs may no longer be able to pay out distributions if there is a breach of financial covenants and the lenders are not satisfied that the trust can fulfill its liabilities. This loss of investor confidence may result in a decline in the REIT's share price and difficulties in raising capital for future investments. Second, is a liquidity crisis. High levels of debt can increase the REIT's interest expenses when the central bank raises rates or there is a cross-default on interest rate swaps. It also means that these REITs will not be able to take any more borrowings. If a real estate investment trust faces difficulties in generating sufficient cash flow to service its debt, it may be forced to sell assets or raise equity at unfavorable terms to meet its financial obligations. And thirdly, there might be a breach of loan covenants. REITs typically have loan agreements with various lenders that include specific covenants, such as maintaining a certain level of gearing. If the REITs breach these covenants due to excessive gearing, it could trigger default provisions and additional penalties from lenders. To avoid these consequences, REITs typically closely monitor their gearing levels and take proactive measures to manage their debt levels responsibly. This may involve refinancing debt, reducing leverage through asset sales, or adjusting their investment strategies to maintain a sustainable capital structure within regulatory limits. But despite the breach, it does not mean that the REITs that exceed their gearing limits will have to stop operating. REITs are still able to collect rent from tenants and continue being listed. However, investors may need to wait for a substantial period of time before the REITs get their gearing levels back within limits. And during this time, its unit price may be under pressure given the likelihood that there will be no distributions, and doubts over whether it is able to stay in business. What other repercussions can you think of for REITs that exceed their gearing limits? Drop a comment below. If you found this video useful, please drop us a like and subscribe, and tell us what further topics you would like us to explore.